Can you buy a business with no money down, no money out of your pocket? In this video, I'm going to share with you, can you buy a business with no money down? Yes, you can. I'm Jeramiah Townsend, the business broker advisor, and I'm going to show you, I'm going to share with you today how you can buy a business with no cash out of your own pocket. Now, before we get into into the details of this, make sure to like and subscribe to this video. Click the button wherever it is. Please leave a comment. Let me know what you think. That way I can better add more value to you. Now, can you buy a business with no money down? Absolutely, yes, you can, but it's not easy and it's not normal. Generally speaking, a business is going to cost anywhere from 1 times earnings to 5 times earnings. When I say earnings, I mean however much money the owner puts in his pocket. So if he makes $100,000 a year, generally speaking, just rule of thumb so you understand, that business might be worth $100,000. It probably won't be worth $500,000. It might top out at $200,000 or $300,000, but quite frankly, closer to 2 is how the statistics are going to run. It's actually going to be give or take 50,000 to about 200,000 on a business that size. As the business grows and gets closer to 300, 400, 500,000, it gets up to 3 to 5 times multiple, and it depends on a lot of factors. So if you're making $100,000 a year as a business owner, that business might cost $200,000. Now, if it costs $200,000, you need 10% down in order to get a bank finance loan for it. You'll go to the bank and they'll say, well, do you have, sometimes banks will say they want 20 to 30% down. You can actually get that financed with as little as 5 to 10% down. So as little as $10,000 to $20,000. Now, do you have to come up with that $10,000 to $20,000 on your own? No. So this is how you buy a business with no money down, or none of you, to be more specific, with no cash out of your own pocket. So you need to come up with that down payment. Number one, you might ask for the owner to carry the note. Yeah, this happens all the time. Excuse me. So the owner might want to sell the business and he's just ready to move on. Maybe he needs to move on. The business owner, let's say you want to buy a janitorial company and he owns a small janitorial company. His wife is moving for her career and he has to get rid of his business so that he can move with his wife. So he might do what's called an owner carry, where he says, hey, look, pay me based off of the future income of the business. So that's one option. Honestly, most business owners aren't going to do that. Just like when you sell a car, a used car, do you really want people to be making payments to you? Probably not. Now, if they come with a sizable down payment, maybe, but it's always worth asking, how much are they willing to carry? Will they carry the note on the business? If you come in with a down payment, business owners are more likely to do that. Now, the second way of doing it is to get a bank loan. Besides owner carry, doing a bank loan. Now, if you have 10 to 20% down, you're still saying, Jeremiah, I don't have any money. How am I going to come up with $20,000 on this business? And the bank's saying, I need $40,000 or $60,000. Yes, they want 40 or 60. Heck, they want to finance as little as they can, to be honest. But there are ways. You just have to know what to say and who to talk to in order to structure the deal. If you don't believe me, look up SBA down payments. Find that out. And the truth is, the SBA requires a minimum of 5% down payment from a well-qualified buyer. There's ways of going about that. You have to say the right things to the bank. You have to use bank lingo. That's why you hire somebody like me to help you with this. Now, to come up with that 10 to 20% down payment, you can find investors. You can use your own savings. You can use another bank loan. You can use a credit card loan or a cash advance. We talked about seller financing. You can use partnerships. You can use cash from perhaps the existing management team, and maybe they're going to do part of the down payment, or they'll do the whole down payment for you. Again, you have to have the right conversation, saying the right things. If you go into a company and say, hey, will you give me the money for the down payment? The manager is not going to have faith in your abilities to pull that off. And he's just going to say, no, if I'm going to do that, I'm just going to buy it myself. But if you give the manager an opportunity and you have a private conversation and say, I'm buying this company, and perhaps I thought you might want to have a 10% equity stake in the company. Would that be of interest? All of a sudden, the owner might say, well, yeah, I'd be interested in a 10% equity stake, getting 10% of the business. And you say, I'll even allow you to buy the company from me in a few years if that's what you want. We can look at that, several years down the road. By the way, you create a buyout or a buy-sell agreement anytime you bring on partners. But the point being, there are many ways of buying a company with no money down or no cash out of pocket. And that's not to say that the owner doesn't get cash. The owner get a lot of cash on this deal. So the owner is absolutely going to want to do this as long as it meets their demands, as long as it meets their goals and helps them to achieve their goals, the owner will agree to that. Jeramiah Townsend, business broker advisor. Like and share this video, please, and subscribe. Hit the subscribe button. Leave me a comment. That way I know if this is good information for you and how I can better help you buying and selling businesses. Talk to you soon.